Hey, everybody. Thanks for joining. You are at the Unlock the Power of Key Person Insurance webinar, DMI and nationwide. All right, well, let's go ahead and jump in. How about that? I'm excited to hear this, guys. I want to get into it with Allison and Josh. So welcome to our webinar. As I said, this is the Unlocking the Power of Key Person Insurance webinar. If you don't know who DMI is, we've been in business for about 35 years. We're a independent distribution channel, or IMO, based out of Boston. We wholesale life insurance and annuities. And today we want to talk about safeguarding a business's most valuable assets by highlighting specific life insurance product features and complementary sales strategies. We're joined by Allison Hoyt, who's the Technical Director of Advanced Consulting Group at Nationwide. Allison, thank you so much for being here. Really appreciate it. We enjoyed your presentation the last time, or actually, there's probably been a few times you've been on with us, so we appreciate your partnership. And we've also got our very own Joshua Rhem, DMI's own Life Sales VP, and that little QR code next to him is just a way for you to contact him. If you want to reach out to him, just scan that QR code with your phone. Also, if you have any questions during the presentation, use the Q&A function, and we will either kind of pause the presentation and try to answer those questions, or just wait to the end. We will get to your questions today for sure. So we appreciate you all being here. I think I'm going to hand it off to Josh, and Josh, let you introduce Allison a little bit and discuss anything you'd like to treetop.
Yeah, thank you everybody for being here. There's just tremendous opportunity in the small business market. There's about 33.2 million small businesses in the US, and that number seems to keep growing. So there's a lot of opportunity to help them address needs that often go unaddressed, and then in doing so, add another source of significant income to your practice. These types of cases do come with a good amount of compensation. So all in all, everybody wins when we address these needs. And our aim at DMI is to help you to stand out in the business market immediately. You don't need to wait years to develop this expert level proficiency before you become comfortable approaching business owners. We want to give you the tools, the resources, the partnerships, so that you feel comfortable approaching a business owner today. Right after this webinar, with what you've learned, you can call us and we will equip you to approach a business owner today. So within the business market, I personally feel that the key person aspect is the low-hanging fruit of the business market. There is 71% of firms who depend on one or two key employees to keep that business running, and of them, only about 22% have considered putting key person insurance in place. So we're extremely fortunate to have Allison, along with other members from Nationwide, here to help us to get a little bit more of an understanding of it and how to tap into it very quickly. So that's all I have to say. We'll kick it over to Allison. Thank you for being here. And we have Allison Hoyt here from Nationwide. Take it away.
Thank you, Josh, and thank you, Glenn. Really happy with Nationwide's partnership with DMI, so thank you. And before I get started, I want to introduce two people who you all should know. They're your Nationwide Life wholesalers. They are on the call, Jeff Sabota and Ms. Amy Miller. I've had the pleasure of working with both of them for several years. They are your go-to one-stop shop for everything Nationwide Life products. And if you have any questions during today's session about our products, take advantage of them being on the call and type in those questions into the question and answer box. Thank you. All right, I will share my screen and bring up the deck that will guide us in our discussion on key person indemnification. And I really love how DMI has promoted this webinar, specifically on LinkedIn. I was looking at your posts and, unlock the power of key person indemnification. It's a door opener, break into the business market, learn to safeguard a business's most valuable asset, spice up the key person sale, learn some new sales concepts. Loved it all. So thanks for promoting this session. And I did want to talk about key person indemnification. I think it's often overlooked by a lot of advisors, or some financial advisors think there's really nothing to it. Boy, are they missing out. There is an art to doing this type of sale. You should, if you want to be in the business market, be aware of it. And if you're going to do something, do it great, right? So I hope to give you a really good refresher on what key person indemnification is and make you think about some things that maybe you haven't thought about before. And I see we have one of the opening questions, and I'm going to just end that poll. Okay. Looks like most of you, 67%, learned about this session from email, the rest, 33%, from the grapevine. All right, so wanted to start out with a little visual game here. When I think of key person, I think of it as this, right? And two of these photos, I think, depict what key person is, and one does not. So I'm asking you, which one does not belong? When you think about key person life insurance and working with business owners, are you able to play along with my game here? Feel free to type in your answer in the question and answer box. If you want to play along, which photo here does not belong? When we think about key person insurance and what it can do for you as the financial advisor, which one of these photos is not it? Give you a moment there. Maureen is guessing the first one, a key, and then the can opener is in the middle, and the garage door opener is the third photo. To me, key person indemnification is really a door opener. So which one does not belong would be B, the can opener. Right? This is a great sale to get your foot in the door of many businesses and working with many business owners. Whether or not this sale gets placed, and hopefully it will, because as Josh shared, there are a lot of firms dependent just on a couple of key people. Even if a key person sale doesn't get placed, you're still likely to transact with some of the business owners or their key people, maybe in other ways or personally. Here's a slide we have on all of our presentations. Nationwide, myself included, we don't provide tax, legal, or investment advice. That's basically the gist. Your clients always need to get that from their own tax, legal, or investment advisors. All right, so here's the agenda for the next 15, 20 minutes or so. First, I'll define and give you some background on what key person indemnification is all about. Then we'll take a look at the life insurance policy used for key person indemnification. We'll talk about structuring the policy, how do we determine a face amount, and the pros and cons of different policy types. And then I'll end with some ways to spice up the sale of life insurance for key person indemnification. So first, a little background. Here's some quotes. The first one is from Andrew Carnegie, a great industrialist of the late 19th and early 20th centuries. He said, "Take away my factories, my plants. Take away my railroads, my ships, my transportation. Take away my money. Strip me of all of these, but leave me my men, and in 2 or 3 years, I will have them all again." We can understand my men to mean my people, whoever they are. And Woody Hayes, former Ohio State football coach, said it a lot more succinctly. He said, "You win with people." Finally, key people have been recognized, or key person life insurance has been recognized in the court system. Here's a quote from the U.S. Court of Appeals from the Third Circuit. It writes, "What corporate purpose could be considered more essential than key person insurance? The business that insures its buildings, machinery, and automobiles for every possible hazard can hardly be expected to exercise less care in protecting itself against the loss of its two most vital assets, management skill and experience." So when we use the phrase key person, what do we mean? I think we mean a unique individual who disproportionately contributes to the revenue stream of a business. The key word there, I think, is disproportionately. These oftentimes are the owners of a business. Other times they can be executives, or maybe just a really connected employee who has really important for the business or has really important technical knowledge. So a key person could be any of these individuals for a business. There doesn't have to be one, there could be more than one. When we say indemnification, to indemnify means to secure against hurt, loss, or damage. And putting this all together with life insurance, when we use life insurance to provide key person indemnification, we're protecting the business That is the key. That is the purpose of the life insurance. It's to protect the business against financial loss or damage due to the premature death of a key person. Now, I'm going to be focusing on life insurance and the death of a key person. If you throw a long-term care rider onto a policy, you can also protect a business against that key person's long-term care event. All the long-term care products at Nationwide are cash indemnity, and that style of benefit payment works very well as a key person long-term care insurance benefit. A business will still be out some revenue or incur some costs if this key person has a long-term care event. So they're able to accelerate a portion of the death benefit for the key person's long-term care event as well. And there's also a product, Nationwide doesn't sell it, key person disability insurance, so that if that key person becomes disabled, the business actually can collect income. So there are a lot of great insurance products that can be used to protect a business against financial loss or damage. I'm going to focus on what happens and how do we protect the business from the premature death of that key person. And a great way to start this conversation is by asking this really simple but interesting question to a business owner or to the decision makers. Who's your most valuable employee, right? To me, I think that's a really interesting question. I'm curious to know what someone's going to say, and I think it can lead to a really important and valuable conversation. So sit down with those business owners or decision makers, and if you're going to try to steer them in the direction of providing key person indemnification, this is a great and simple and hopefully unintimidating question to ask. I hope you all feel like you can go out there and ask this question and engage the person you're speaking with, and then you can transition into how key person indemnification would be able to help. What can a death benefit from a life insurance policy do if a key person does pass away? A lot. It can keep the business running, will assure the creditors that their loans are safe so that hopefully those loans can be renewed if necessary. It can assure customers that the business will continue its operations. The person that's hired, that extra cash can help cover mistakes of the deceased successor. It can cover losses in a less capable successor's mistaken decisions, it can cover those expenses of finding the replacement for the deceased. And really the last bullet, I think, says it all. It could be made available for uses that cannot be determined in advance, right? We don't know all of the costs and potential losses that the business will incur. Better safe than sorry. They're going to have a nice chunk of change at a very vital time in that business's lifespan. All right, so that was a little bit of a background on key person indemnification and why we're doing it and what we're doing. Let's look at and turn our attention to the life insurance policy used. Sometimes I get the question, does Nationwide sell key person life insurance policy? I don't know of any carrier that sells a policy called key person. You can really use any life insurance product for this purpose or in this manner. So when you are submitting the application, hopefully to Nationwide, to Jeff or Amy, how are you going to fill out the application? In other words, how's the policy going to be structured? Well, the key person obviously is going to be the insured life. The business is typically listed as the policy owner. The business would also typically be listed as the premium payer. And if the policy is a cash accumulator, that's another asset of the business. The business will have asset to the cash value, which could be helpful in perhaps an emergency. If the key person passes away while the policy is in force, the business is also listed as the policy beneficiary. So the carrier will pay any death benefits directly to the business. And if done properly, which I'll explain in a few slides, all of that death benefit should be completely income tax free. And if you're wondering, no, the premiums for key person indemnification, they are not a deductible business expense. Just to dig down a little bit more about how the death benefit could ultimately be used, there are going to be costs when a business loses a key contributor. I see it as two sides of the same coin. Profitability is going to suffer There's going to be lost sales and profits. And then there's also going to be costs and expenses, finding a replacement. Maybe some employees leave. And the worst possible outcome is that the financial stability of this business is actually shaken to its core because of this person's departure or premature death, and the viability of the business is called into. Those are all results we want to avoid.
That's a quick question, Allison, in regards to that.
Sure.
So I know when we think of key person, sometimes it's referred to as key employee. So we think of people other than the business owner. Could the business owner themselves be considered a key person and part of this structuring of how to set up key person planning?
Oh, yeah, absolutely. Especially if there are many business owners, more than one. I think it makes a lot of sense to insure each owner. A trickier situation is when there's only one owner of a business. Does it make sense to get key person insurance on that individual owner? Generally, I would say not unless there is some type of transition plan that's been in place. Otherwise, you're just putting money in a business that may not continue. But yeah, absolutely, Josh. A business owner is generally considered one of the key people.
Good insight. Thank you.
All right. So one aspect of the policy that we haven't discussed yet is face amount, right? How do we determine an appropriate face amount for a particular key person? And this is an art, maybe a little science, probably more art than science. There's no right or wrong way to do it, but there are some ways that have developed in the industry. And the one that you are probably most familiar with is the multiple of salary approach. You take that key person's salary and can multiply it from anywhere between 5 and 10 times. That's typically the industry standard. I found Nationwide's underwriting guideline, and we do match the industry standard. We say 5 to 10 times the individual salary, but we may consider a higher amount, if you essentially give us the facts that warrant a higher amount than 5 to 10 times salary. You'd have to attach a more full explanation of the need for the additional insurance, including maybe information about the business's value, more about the proposed insured and their monetary contribution to the business, any in-force coverage on other key personnel. So that is an easy way to determine a face amount for one of the key people, multiple of salary approach. Another approach, which I don't see used as much, is the discount to business value. So whatever the value of that business is, you discount it due to the loss of a key person. And according to Number Cruncher, if you're familiar with that software program, they do cite some authorities that have said 15 to 20% of a discount is warranted if the business will survive and likely hire a competent replacement for that key person. But for Josh's question, when it comes to insuring an owner, probably the discount to the business value is more like 20 to 45% if the business would be more likely to fail or be placed in jeopardy. And if you're interested, we do have access to Number Cruncher software, and we're able to give you an output that kind of looks like this. Here I imagined a $3.5 million business, and not necessarily a key person like an owner, but a key person nonetheless. And I discounted the company 15%, and you're looking at a policy with a face amount of at least $500,000, highlighted there in blue on the output. Happy to work with you to provide that if you find that helpful. And another strategy to determine face amount is known as business life value. It's similar to the concept of human life value, if you've ever heard that term. Basically, you're trying to figure out what's the present value of this person to the business over their remaining working years until retirement. So if the business would lose $100,000 each year and this person had 20 years to go to retirement, you would try to find the present value of $100,000 for 20 years. So all these approaches are valid. The other question you have to consider is what a carrier would be willing to underwrite. All right, now let's talk about different product types that can be used to provide key person indemnification. A lot of times I do see level term policies being used for this purpose. pros and cons to that. Term will provide a death benefit if you pass away within the term. So if the limited period of time of the term policy is appropriate, that could be a solution. One drawback of the term policy is that it provides a level death benefit, so there may not be an opportunity to increase that death benefit. If that's warranted, you might have to buy an additional policy, and then insurability at a later time becomes an issue. Of course, there's no cash accumulation, but the draw is that is typically the most cost-effective solution. As far as nationwide level term products, they're a great value. They're not going to be the cheapest. We don't want the cheapest term products for this purpose. We want to make sure they have good convertibility and living benefits. And nationwide level term products have great conversion privileges and living benefits. But level term is an option for key person indemnification. And I have some ideas to give you an idea of the cost of $500,000 of protection for a male 45 years old. Some of our level term costs, 10, 15, 20, and 30 year, range from $420 a year to $1,245 a year. And I put this slide together 3 or 4 years ago, and I double checked this morning, and those costs, those premiums have not risen over the last 3 to 4 years, which is pretty cool, I think. A good middle ground product for all business planning, including key person, I think is no lapse guarantee universal life, NLGUL. So I also priced out Nationwide's no lapse guarantee universal life products, and they provide some really interesting flexibility. You can make them temporary or permanent to age 70 or to age 100. You can add a real long-term care rider, and with the to age 100 option, you can use a return of premium rider. So no lapse provides a lot more potential solutions for a business, right? We can also protect against that key person's long-term care event. If the return of premium rider is added, they can get 50% of premiums back in year 16 or 100% back in year 21. And also, 4 years ago, there was no change in the to age 70 no lapse guarantee product. And actually, somehow, I don't know how it's possible, the to age 100 premium is actually lower than when I created this slide about 4 years ago. So term, really affordable solution. Want to make sure it's a good term product, a good contract. A good middle of the ground solution, middle of the road solution is a no lapse guarantee universal life product. Then at the top of the chain, we have our cash accumulators. They are going to be the most costly solution, but they also provide the most value. You get what you pay for. The cash value can be reflected and is reflected as an asset on the balance sheet. And as long as it's a non-met, the business needs cash in a pinch, they can withdraw up to basis or take loans tax-free. They still get the deferred growth of cash value. And IUL is going to give them downside protection, and VUL maximum growth potential. One thing to point about at cash accumulators, and specifically at Nationwide in our IUL, Indexed Universal Life accumulation products, is this rider, which I would add to all of my business-owned cases, especially key person. There's no cost to it. It's the change of insured rider. And I think using this rider makes the key person life insurance sale a lot more interesting because it fundamentally changes the nature of this product. It becomes a real investment for the business rather than just death benefit protection. For example, let's say Jeff is working hard and, gets a better offer, so he leaves the business. Well, we're going to hire Amy to fill Jeff's position. And we're able to, as long as Amy is insurable, continue the policy that we started funding when Jeff was working for us. And this could go on even if Amy later leaves the business. So the change of insured rider, I think, makes this sale really dynamic and provides added value to the business and is a great reason to choose a cash accumulator for this purpose. Again, at Nationwide, this rider is only available on our IUL accumulation products. Okay, let's say a key person does not pass away while working. As I said in my little change of insured hypo, they just, leave the business. What happens to the policy? That's a common question I get. Well, the bottom line, essentially is that the business owns the policy and can decide what to do with it. If there is a change of insured rider, they may exercise a change of insured rider. They can potentially sell it to that departing key person, right? That person's no longer with the business. They don't really need to protect themselves against that person's death. There would be a different rationale for keeping the policy then. The business could decide to keep the policy in force, or the business could take the cash if a cash accumulator. One nice kind of spin to the key person sale, this is from a book called Marketing to the Mass Affluent, is when you're in negotiations for the policy, is also to enter into a key person agreement where the business owner, whoever from the business, and that key person give that individual the option to purchase the policy if he or she does terminate employment. So that can also make a cash accumulator a more valuable solution. The business potentially could be repaid the premiums that it paid for that policy if the key person does purchase upon departure. So I do like the idea of using a key person agreement whenever we are doing a sale of key person life insurance. And I want to call out this case. One of my colleagues went to the Heckerling conference this year. That's a very big, prestigious estate planning conference down in Florida. And I came across this case in one of the outlines. This case is from Oklahoma, and it actually deals with key person. Really surprised me that these type of laws are on the books, but I encourage you to look into whatever states you practice in, whether if there are similar laws on the books, because in Oklahoma, it says the employer who had key person indemnification and this employee retired, the employer must offer to transfer the policy to the employee for an amount equal to its cash surrender value. So United Methodist Home should have offered Wegmiller when he retired to purchase the policy for the cash value, and they didn't do that. So Mr. Wegmiller's spouse sued them for the death benefit, and she won. Having failed to offer Mr. Wegmiller, to purchase the policy, the employee's estate was entitled to recover the entire death benefit paid when the employee died. And this is due to an Oklahoma statute, section 3604. So although I'm spinning this key person agreement as kind of a nice to have and an appealing way to enhance the sales process, it might also be required by state law. That caught me by surprise, and I wanted to share that with you. All right, and finally, how do we spice up key person sales? It is, a bread and butter business sale. It's really important. It's great as it is. But how can we spice things up a little bit? One way is to add a death benefit only plan or an endorsement split dollar plan onto this policy. Basically, what you're saying is, key person, if you pass away, you will pose a financial loss to the business, but we also want to provide some protection for your family. So a death benefit only plan or an endorsement split dollar plan can help protect both the business and the family from this person's premature death. For example, if $500,000 of key person coverage is determined to be needed, we can issue a policy with $1 million death benefit. And if that person passes away, $500,000 goes to the business, $500,000 goes to the family. It doesn't have to be an equal 50-50 split. It can be whatever the parties want, just showing that as an example. And here's a little side-by-side comparison of both options. Both of them are going to require a legal agreement, but they have different tax consequences. A death benefit only plan does not have any tax consequences during the insured's life, but the benefits will be taxable ordinary income to the insured's family. Whereas with an endorsement split dollar plan, there are slight income tax consequences during the insured's life, but the death benefit should be completely tax-free to the family. And here's my final way to spice up a key person sale: key person plus deferred comp, what we would call an LTIP or a long-term incentive plan, because it's not technically deferred compensation, where In addition to buying the policy, the business could say, okay, Jeff, if you remain employed with us, if you don't hop down the street, if you remain employed with us till you're retired at age 65, we're going to give you this policy. Essentially, we're going to bonus this policy to you. And you don't have to worry about all of those complicated deferred comp rules if we satisfy the deferral exception, which means if we tell Jeff he's going to get this policy at age 65, and we actually transfer him the policy at age 65, or within 2.5 months after the year in which he turned 65, we're good. So this is a really awesome way to provide a benefit to the business during the insured's working years and to the insured in retirement. Pair some key person with a long-term incentive plan.
So Allison, that's pretty cool. And not to interrupt, I apologize, but it's like you're almost killing two birds with one stone, because you don't want your key person to die, but also you want your key person to stay if he lives. So it's like almost a key person employee benefit that can help retain the key person at the same time, isn't it?
100%. I love the way you've spun that. This is also an employee retention tool.
Good idea. Thank you.
Yeah, love it, Josh. Good thinking. And I showed you a snip from a VUL policy. I was just illustrating $500,000 of coverage. And also keep in mind that maybe when a key person retires or leaves the business, you can always reduce the face amount if that's something that's desirable. So here I illustrated a $500,000 policy, and this employee, let's say Jeff left and retired at age 65, so he becomes entitled to the policy. He's able to take out tax-free, in my little story here, $50,000 a year from age 65 through age 69. Essentially, we've given him that bridge so that he can help delay his Social Security income payments and maximize those benefits. So the company was protected by $500,000 while Jeff was working. He stayed at age 65. We transferred him the policy. He takes out $50,000 a year for 5 years, $250,000 tax-free, can delay Social Security, and there's going to be over $100,000 of tax-free death benefit to his heir if he dies at age 85. So love it, Josh. Key person plus a employee retention tool. The last thing to cover here are the tax issues. I mentioned earlier that premiums for the key person policy are not a deductible business expense. You may be surprised to learn that the death benefit is actually partially taxable to the business unless the business complies with the employer-owned life insurance rules of Section 101J. So if you don't comply with 101J, what happens? Well, in my example, if you pay $10,000 of premiums for this policy and a $250,000 death benefit is paid, only $10,000 your premiums or consideration paid for the policy is received tax-free. $240,000 would be taxable, right? So not complying with the employer-owned life insurance rules, ouch, can be a really nasty tax hit. If you have good advisors, you're working with DMI, you're working with Nationwide, we're going to make sure you comply with these rules. And the first way to make sure a death benefit is completely tax-free is to get the insured's consent in writing prior to the policy being issued. Nationwide provides a notice and consent form as a courtesy. We don't need it back, but the employer should keep the original on file in case they are ever audited. In addition, the consent form is necessary. It's not sufficient. In addition, for a death benefit to be completely free to a business, not only does the notice and consent form have to be signed, one of the following must be true. The insured was an employee within 12 months of his or her passing, or the insured was a director or highly compensated employee at the time the policy was issued. And highly compensated employee for this purpose means one of the 5 highest paid officers or in the top 35% of employees by compensation. Comply with 101J, the death benefit's completely tax-free. Otherwise, the death benefit will be partially taxable. Big part. Any amounts above the premiums or consideration paid. So that's my story on key person indemnification. I think it's a really great, important life insurance sale. If you're hesitant to work with businesses and business owners, this is the way to open that door. And there's a lot of fun things we can do with it. We can layer on these employee retention strategies from death benefit only plans, split dollar plans, or a long-term incentive plan. So happy to take any questions from the audience, or if Josh, Glenn, Maureen, you have any, feel free.
Thank you so much, Allison. That was very educational for me. But Josh, we don't have any questions at this time. But Josh, I was wondering if you have anything to add or any questions yourself.
Yeah, no, that was awesome. Very thorough, very informative. So, I mean, has Allison made you an expert on key person insurance? Probably not just yet. But did she explain that there's a need? And can you address a business owner today? Well, 100% yes. Because we have Allison and Nationwide backing us, and we have other tools and resources, you could have an appointment with somebody this afternoon. If you have a business owner that you're going to talk to today or this week, call us and we'll enable you to talk about these solutions. So, and in fact, here's a quick call to action. If you have business owners you're going to talk to today, or even better yet, proactively go out to your book of business, identify those business owners and just say, hey, my focus this month is to talk to my business owner clients and to help them identify the key people in your business so that we can help protect them and retain them. If you can say that, that's simple enough, and then we'll help you with the rest. And I guarantee you will give them a solution that they may not have known they needed or didn't address, and you'll make a lot of money doing it. So tremendous opportunity. Don't wait to take advantage of it.
Yeah, absolutely. You know what, Josh? To follow up on that, well, actually, we do have a question. How do we connect with you to start a discussion? So I would scan Josh's QR code there, or in a second, I'm going to pull up here. I'll do that now. I'm going to share his contact information. Josh can carry on that conversation with you.
Yeah, and true story real quick. I had an advisor call me at 4 p.m. last night. He was having a dinner with two individual clients who happened to also be business owners, and we prepped him for the conversation, and he's walking away with term insurance solutions in this case, but premium upwards of $20,000. So again, not to sound like a broken record, but just don't wait.
Yeah, if you feel uncomfortable, you know, and you're hovering around business owners, you don't know what to do next, reach out to Josh. I would also say that in the spirit of that conversation, you know, on March 20th, we're going to be doing a webinar called Get Inside the Business Owner Mind. So we're partnering with a business coach by the name of Tom Perrone. And with him, we can crack the code together on this. So he can actually partner with you one-on-one to help you through those conversations that you need to have credibility with a business owner. So, and we know the DNA of the business owner is a little bit different, right? So it can be threatening, but don't feel threatened. So call Josh, watch our webinar on getting inside the business owner mind. You know, we'll put up a recording of this webinar, watch Allison's presentation again. So, you know, we really appreciate you guys being here. Actually, I promised to share Josh's contact information. Here it is right here. But I think that's it, guys. I think that concludes the webinar, unless you guys had any final thoughts.
That's it. That's me. Thank you again to Nationwide. Amy Miller, Jeff's on here. I know I've asked Amy for illustrations for a client that I was going to need to talk to in about a half hour. And I know I feel like it would drive her crazy, but it never does. Nationwide is super responsive and supportive of our business, and in turn, your business as well.
Yeah, Amy and Jeff, thanks to you guys as well. Really appreciate it. Great partners. And everybody, thanks for being here. Appreciate some of the engagement with the audience today. And we'll see you next time. Have a nice day. Cheers.
Bye.